Time to bring on board our technical experts. We've got with us Sandeep Wagle as well as Prakash Gaba. And Prakash looking very shaky on the frontline index. In fact, we've breached those Jan 8 lows as well. Do you think 8150 will be sustained with conviction? And I'm talking about the near term.
Well, I would say that Nifty last couple of days has seen a reactive up move and actually broken down the previous low on the last day of an revenue expiry. Technically, if the market has to go up, two things have to happen. A, the short covering has to happen. A. B, buying has to happen. Even today, we are not seeing short covering, so the trend is still down. Will it stop at 8150 or 8100 is difficult to say. Though the market is stretched, we may get some violent corrections. This happens on the first day of a new series, but the market is still down. I would say that 8250, 8300 on Nifty futures is a tough nut to crack.
Okay, that's a call coming in on Nifty. Sandeep, would like to get your thoughts on Bank Nifty. You know, even though the benchmarks are trending downwards, Bank Nifty is right now trending flat. In fact, a lot of volatility is what we have seen here. What are your expectations from Bank Nifty and some of the stocks here?
Good morning, Kamya. I would expect the Bank Nifty to outperform, and in fact yesterday or day before at 18,200, 250, I had a view that the Bank Nifty will go to 18,500. A part of that move has already come in, and having said that, I don't want to buy the Bank Nifty only because the Nifty is down. Now we are getting two very clear contrasting signals. The Nifty is pulling the Bank Nifty down. Now sooner than later the Bank Nifty will pull the Nifty up. So I still maintain my view of 18,500, 18,550 in the Bank Nifty. But with the sentiment that we are on or we are witnessing in the Nifty, there can be some amount of choppiness, some wild fluctuations, and that could be a problem as a trader. But otherwise, Bank Nifty is definitely strong on its own, and a little bit of support provided by the Nifty or some kind of a positive sentiment, the Bank Nifty will outperform on the upside.
Okay, that's the call on the Bank Nifty futures, 8170 on the index. But let's focus in on the broader markets, and here's an interesting play. Ricoh India, in fact, that stock has been a solid outperformer. In the last 3 months, it's managed to gain in excess of about 130%. In fact, 127% is what it's gained. The management is very bullish on the future prospects, indicating that they can even quadruple their revenues by FY17 end. Let's bring on board then Manoj Kumar, Managing Director and CEO Ricoh India, to talk about just that. Thanks so much for being with us. You're fairly optimistic on the growth prospects. Earlier, you had guided that you will treble your revenues while maintaining the 50% CAGR growth rate. And now you seem to be confident of maintaining the track record of 40 to 50% compounded growth on the top line. Just run us through what exactly will aid this.
Yes, so we have actually trebled our growth in the last midterm plan period by achieving 1,000 crores, and what we are saying is that we will take this growth up 4 times for the current midterm plan which is running, which means a CAGR of about 55 to 60%, and that is something which we have consistently achieved for the last 3 years. And by the looks of the things, there is nothing which is stopping us. So let me just explain to you how is it becoming possible for us. So it's a two-pronged strategy that we are pursuing in Ricoh. One is to reinforce and develop earnings power for core businesses, and the second one is to achieve growth by creating new profit generators. So as you know, so far as our core business of imaging goes, there we have been experiencing, rather I would say, more than organic growth for the last couple of years. And so far as the new lines are concerned, the new profit generators are concerned, we have added IT services and communication in that domain over there. Now, through introduction of these new profit generators, we have now emerged as an integrated solution provider to take care of the customers' need A to Z under one single umbrella. This is propelling our growth, and this is helping us to grow not only in the new business lines or the new profit generators that we have created, but even in our core domain of imaging products. So the fusion of these two is actually working wonders for us, and this is what is helping us to deliver growth on all the fronts. So IT services, as we have said before also, was introduced primarily to complement the core business in our organization. Not only has it complemented core business, but it's also grown substantially in its own rights. And the result of that is that we are now an active player in many projects so far as IT goes, whether these are government projects, non-government projects, whether these are government to citizen projects, mission mode projects. We are active players in the digital India space also. All this is having a rub-off effect on all our business lines.
Okay, so then it seems that now you have much better visibility on converting the big deals that you've bid for on government to company side. If you could give us some insight in their size, scope, which you're expecting to bag in few coming months, and what's the pipeline like?
Pipeline is very healthy. In fact, some of the deals you might be aware of, the prestigious ones that we have already won. These are in the space of digitization in the various states. These are in the space of also automation in various states. We also bagged a prestigious deal from Department of Post for modernization of rural post offices and converting them into vehicles of financial delivery. We have also bagged one large deal for ICT for Delhi schools, 1100 schools in Delhi. So that's another one that we have won. I mean, these are just a few to name, but then there is a very healthy pipeline that we are working on, and as time passes by in the near future, you'll get to hear more about such deals that we are actually going to work on.
Okay, and going forward, your operating profits too, they have been growing at the same rate as revenues, yet the EBITDA margins have remained a little bit stagnant at levels of about 6%. So what is the target that you're, guiding when it comes to your margins, and what will it be contingent on?
So far as EBITDA is concerned, we are chasing a target of about 8 to 10%, and we see no reason why we should not be able to achieve that. In the past, we did have some problems in the sense that our margins were under pressure because of rupee depreciation against US dollar. Even though for IT services, we are not dependent upon exchange fluctuation, but for the rest of our products, since we import, we are dependent on the exchange rate. And with the rupee depreciating steadily against US dollar, our margins were under pressure, because of which our EBITDA also came down. However, with rupee having stabilized to a very large extent against dollar, I see no reason why we should not be able to bounce back and look at the EBITDA rates of 8 to 10%. Also, when it comes to IT services, initially what we do is we have to focus on any large deal, we have to focus on hardware, and hardware is where the margins are usually low. As time passes by and as a project reaches its maturity, the service component in that project grows, and as the service and the solution component increases, the gross margins also go up, because gross margins are higher on service element and on solution element. For many of the projects that we are executing in the IT space arena, we have reached that state of maturity where we are generating far higher margins than before, because we are already done with the hardware aspect. It is now on the services part that we are focusing upon, and that also is a very important factor that's going to help us in further improving our EBITDA margins. So I see no reason why we should not be able to clock EBITDA margins in the range of 8 to 10% going forward.
Okay, and you did mention about the government to company side of orders that you are bidding for. You've also been focusing on winning multi-year contracts from private corporates and institutional clients. If you could run us through and tell us from its current revenue share, what do you see this growing over the next couple of years?
In fact, okay, so let me put this in perspective. So when we speak of the various business domains, IT services now contributes to more than 50% of our total top line. Within IT services, if we were to talk about these various projects that we are executing, whether it's government to citizen, whether it is mission mode projects, or whether it is in the space of automation of a customer's workplace, even in the non-government sector, these put together contribute to roughly about 75% of the total business which we do in the space of IT services. So which means today, so far as our company goes, about 40% of our total top line is coming through these large projects which we are executing. And here again, if I were to just sort of broad base this discussion a little more, if I were to just move beyond the realms of IT services and also transgress into our imaging line, within the imaging domain also we offer document management services to our customers. Now this document managed service portfolio by itself also is in the nature of a project that we execute for the customer, because it has got multiple components to it, and there again you get a very healthy mix of not only revenues but also margins which come into play. And as our organization is maturing and as we are getting into the big boys league by executing these kind of projects, this is where we feel the real growth lies, and we expect the total component of such deals to cross more than about 60% of the total top line which we achieve for our organization.
We'll leave it at that. Thank you so much for taking time out and joining in. All the very best for the future growth prospects, Mr. Kumar. And that's the word coming in from Ricoh India. But Biocon put out a pretty stellar set of numbers. Let's connect with the management. We've got Kiran Mazumdar-Shaw joining in on the show. Thank you so much, Ms. Shaw, for joining in. Congratulations on a pretty stellar set of numbers. Would you say that this time around, the bump up in the profits can largely be attributed to that exceptional gain?
That's true. I think, we've had a good set of numbers, but the real huge bump up that you're seeing of 78% growth in Q4 and the 20% growth in at the annualized level is certainly attributable to the exceptional income that we realized by selling Syngene shares to IDF.
Now, CRAMS has also shown a good run rate this time around. How do you see this business shaping up?
So, we've seen a 20% growth in our CRAMS numbers this quarter and 15% year-on-year at an annualized level. And I think this basically augurs very well for our research services business and for Syngene as it prepares for listing. I think this is a business that is really now very well balanced between anchor clients, between its contract manufacturing opportunities and its differentiated services that it offers to a large number of clients, along with the kind of FTE-based business which is being offered to a large client base. And I think the Q4 numbers are reflective of how Syngene is really now positioning itself in terms of a sustainable growth trajectory as it prepares to list in the market.
Okay, and tell us about have the Middle East conditions have had any impact on the business this time around?
Well, the Middle East has been a challenge for us for several quarters now, and it continues to be the same because it does pose a very high credit risk for the organization. But I think we are taking measures to see how we can have less dependence on the Middle East, and we are sort of veering away to other markets, other emerging markets, and I think some of this is paying off. So I think the year ahead is going to see a much better recovery than what we were subjected to this fiscal gone by, and I think we are quite confident that the year ahead will not see the kind of surprises we had seen last fiscal. As you can see, some of the triggers this fiscal are the regulatory approval by the Mexican authorities for Glargine, and this obviously enables us to participate in very large Mexican tenders that will now open up for Glargine, and since we are the only biosimilar Glargine approved in Mexico, actually puts us in a very good position.
Now, your R&D costs have been up almost 93% over the last year. How do you see your R&D spends shaping up going forward?
I think this is a very positive indication of how our R&D is performing. I think it has to be viewed as a part of our growth prospects. I think the higher we spend in R&D, it is indicative of the clinical advancement of our programs. Biocon has the largest portfolio of biosimilars globally, and two of them are in advanced stages of phase 3 clinical trials, which means that we will be able to file for marketing authorization in the not too distant future. And then many of the other programs are also entering phase 3 clinical trials, which tells you that these spends are actually focused on making sure that we get into the market at the earliest opportunity. So I think R&D spends are going to increase. In fact, you've seen at a gross level, our R&D spends have gone up from 169 crores to 329 crores this fiscal. And I think the FY16 fiscal will also see this number increase. Even at a quarterly level, you can see that R&D spends have gone up from 29 crores to 56 crores this fiscal, even at a net level. So I think you can see that our programs are really advancing. and the kind of clarity that is coming across from regulators like US FDA and EMEA augurs well for companies like us.
Sure, if you can also give us clarity on tax rates going ahead.
So I think tax rates are going to be at this 18-20% levels because we are able to balance our SEZ tax rates, our export tax benefits, and then of course the underlying tax rates that pertain to